to the channel. Here in this video, we are going to get into what I believe the course ahead looks like for our markets, for AMC stock. And I know a lot of people are not exactly liking this market. It's not exactly treated you well since the end of 2021. 2022 was terrible. 2023 was terrible. And 2024, well, I think there's better things ahead. Normally, this is the case. The data supports this, historically speaking. If this data is wrong, then 2024 is going to be a pretty rough year. But I don't think it is. I think any logical investor or economist or analyst really should be able to understand this. And that goes for you guys as well. This shouldn't be too groundbreaking information or a hypothesis. Now, in this video, we're also going to get into what my expectations are for AMC stock, what I think the stock is going to do, MOAS, NOAS, what are we expecting to see for AMC stock. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I hope you guys are having a freaking fantastic weekend so far. Let me know what you guys are doing for your weekends down below in the comments section. So first things first, I want to start with a little bit of a warning here. Again, I'm not a financial advisor. I'm not a financial planner. Obviously, you could be right. You could be wrong. Never trade or invest based off of anything I'm going to say, especially here in this video. But let me just be honest. I think as we get closer to 2024, we're going to see some pretty good things start to happen. Now, I think 2024 is going to be a lot better of a year. Now, the question is, do we go into a recession? Do we not? If you look at the data today, you're far from a recession. You're going to have to see some kind of wild pullback in the data. Now, maybe, just maybe, what we've seen over the past 2 years or so, the weak data, the strong data, the feeling that we're already in a recession. Like, if you just look at what you make now compared to a couple years ago, it's probably not that much more. Like if you made maybe $20 an hour then, you might make $25 or $27 now. But I mean, back in 2020, 2021, I could buy a do you have the formula? Hand me the formula. Hand me the formula. I'll just show you guys. Well, maybe this is not exactly what I was looking for, but this is a small little can of formula, right? My hand is kind of almost the same size. You used to be able to buy 2 of these for $20 back in 2020 when I had my first daughter. Now this is $20. I don't care if you make $5 an hour more. This more than doubling in price, just as a reference. You don't feel that great about the economy, about your dollar, about the way things are going. Just throw that over there. That didn't sound good. You don't feel that great. What if I said that maybe the government's data is just so messed up that when we were seeing worse economic data, when we got those 2 GDP prints in Q2 of 2022 that were negative, maybe we were actually in a recession this entire time. Maybe growth is starting to accelerate because the data, the way it's collected, does not reflect the consumer. It does not reflect the way the economy actually is enough. Because after all, GDP uses inventories and exports and imports and all kinds of crazy stuff to come up with their numbers. So if we were in a recession the whole time, well, that makes sense. Stocks did poorly. But if we were in a recession the whole time, Wall Street didn't know it. And maybe we're at a point where we won't go into a technical recession. That's a possibility. Now, I think right now there's really a tale of 2 stories here happening in the markets. What you've seen over the past year or so with really the outperformance of big tech, big tech has been priced as if there is no recession. Whereas small and mid-cap stocks are priced as if we're already in a recession. It really came down to the Fed and that rush to safety. Investors, think about it like this. Microsoft does not sell more cloud products to businesses if we're seeing Fed funds rates go up or down. Really doesn't affect much. Apple does not sell more iPhones if the Fed raises rates or lowers rates. Recession, obviously, that's a little bit different, but we technically have not been in a recession. So keep that in mind. But the stocks that have done well, your large stocks, tech stocks that control the broader indexes, that make the picture look, pretty good, relatively speaking, those are the names that had all the money flowing into them. Your small cap stocks, exactly the opposite. Nobody has wanted to own your small cap stocks. And we've talked about this before, and we've went over this before. You're basically sitting at some of the longest periods of time where small cap stocks have not hit a new 52-week high. The internet bubble was higher or longer before we hit a new all-time high. That was almost 600 days. The global financial crisis was almost 600 days. And right now you're sitting at about 500 days since the last 52-week high. I mean, if 2024 you don't hit a new 52-week high, that's going to be breaking historical records. Okay, so it's simple here. Big tech stocks actually benefited from the Fed raising rates because they have tens of billions of dollars of cash in the bank that they're collecting interest on, billions of dollars every quarter in some companies' cases. Whereas small cap stocks, they need to refinance that debt, they need to raise capital. None of that is good for small caps. That's the big story, and that's why small caps are probably going to start recovering aggressively into the end of this year, really December, but if not, probably the beginning of 2024, as the markets say, hey, we're probably going to get rate cuts a lot sooner than we previously expected. So I think, again, the markets are forward-looking. So it's not a surprise what I'm saying. The markets realize big tech stocks, they don't really benefit from rates coming down. Maybe a little bit, but it doesn't move the needle for big tech. The companies that benefit are the small cap names. Again, the names that have not wanted any love. And either way it goes, we're probably going to get some rate cuts in 2024. And this makes me really bullish on AMC stock heading into the end of this year and into 2024. And just, let's be honest, based off of what we're seeing with the chart, based off of what we're seeing in the option activity, based on the lack of attention we're seeing with AMC, I think you're going to get your time to shine here coming pretty soon. Now, I've said it before and I'll say it again for redundancy's sake. You really didn't react to good news for over a year, right? From, well, pretty much a year. Ever since this court proceeding started, technically it was like 9 months from January to September. You just didn't react to any good news. AMC turned a profit for the first time in 3 years, 3+ years. Nothing. The stock didn't react at all. That's different now. And AMC stock's going to be able to react. And I think some of the movie deals that we've seen with Taylor Swift, Beyonce have had a positive effect on AMC's share price, at least during a time where the S&P and the NASDAQ have basically been free falling. AMC stock has been trading sideways. That's pretty good. That's pretty good on AMC's part to be trading sideways, even trending up a little bit. Today, the S&P was down, including after hours, 0.52%. AMC stock was down 0.87% in regular trading, and it was up 1.48% in after hours. So pretty dang strong by any, measure that you can actually point to. And again, if you do look at this chart, the valuations on forward PEs for small cap stocks are trading at the same levels they were during the 2020 crash at the lows, trading at the same levels they were during the 2008 crisis. I mean, it's been a long time since you have traded at some of these valuations. And it's not just small cap stocks, it's some of your other stocks like a PayPal, like a Square, that are trading at ridiculous levels. Look at this. This is from the Short Bear. I highly recommend you guys follow him over on Twitter. This says, here is what revenue looked like when these companies traded at today's levels years ago. This would be like 2017, 2018 levels. PayPal did about $2.97 billion of revenue for their Q3 years ago. And now they're doing about $7.29 billion in revenue. Yet the stock is down big time from where it was at the same period. Square did $282.6 million. Today it's doing $5.53 billion in a quarter. And these stocks have gotten absolutely punished. I mean, I think it's pretty clear. That's not going to last forever, right? You're going to see this turn around. And I think towards the end of this year into 2024, that's going to happen. Now, whatever happens with this Middle East conflict, crisis, whatever you want to call it, those are the things that are really going to affect the markets in the near term. You also have Apple earnings coming next week on Thursday. You also have the Fed that's going to be coming as well. I believe they are on Wednesday. We can go ahead and double check here. November 1st. So November 1st is going to fall on, let's go ahead and see, on Wednesday. So yeah, you're going to get the Fed, and then you're going to get Apple earnings. The Fed's either going to help or hurt this crash a lot. So in the near term, there's problems, okay? There's problems. Once you get earnings out the way, once you get the Fed out the way, once we realize to the extent of this Middle East conflict and how much that is going to widen out, then we're going to have a lot better sense on what direction the markets are going to go in the short term. But I think in the longer term, couple months out, it doesn't matter if stocks fall. It doesn't matter if stocks rise on an index level. I don't care. The fact of the matter is, as markets start to realize rate cuts are coming in 2024 to some capacity or another, that's going to cause money to flow into your small cap stocks. That is going to help out small caps. That is going to potentially drive a big rally in small caps, whereas your mega caps might actually see outflows. So don't be surprised if you get this slow bleed of big tech, because money's flowing out of big tech and into small caps. You could have a rally in small caps and actually a declining market on an SPY or QQQ level. That's possible because these small caps have virtually no weighting in those indexes. So that's kind of what I expect over the next 3 to 6 months here. And I think during that time, you will see the short squeeze in AMC. I do think the lack of kind of attention and publicity AMC has had recently is actually really good. Right? You're not buying the stock at the highs. Even though AMC is $7 off of its $7.05 low, you've gotten confirmation that the stock is capable of doing great things. We just need a market that's more allowing that to happen. And then we obviously need some kind of catalyst. We need something good to happen, which I think is only a matter of time that is ultimately going to happen. But, I mean, the fact that AMC is not trading at its $7.05 low, it tells you a lot. The fact that AMC's option chain is literally the most bullish stock that I can find as far as a put to call ratio is, again, telling you something. So these are just my opinions. Let me know what you guys think about this down below in the comment section. In the meantime, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time, I send out alerts every time I make trades. Link down below in the description of this video. You guys enjoy the rest of your day or night or weekends, and I will see you in the next one.